diving deep into a website where it's as easy as ordering off Amazon to order a rental property. Hey, it's Rebecca. Thanks for joining me on the Mama Lorian Way. If you like what we're providing about investments or becoming financially free, click like, click subscribe, and keep joining us. So today I want to talk about a website, diving a little bit deeper. I profiled it slightly on an earlier video. This site is called roofstock.com. Roofstock.com. I had to say that 3 times before I got out of my mouth. Let's go ahead and dive in. They provide sources for investors to be able to buy properties, sell properties. These are rental properties online in markets that you may not even be physically close to or even in the same time zone. So I wanted to go in a little bit deeper on just what they have on their site. And I'm just looking at buying properties. So you can filter them newly listed, minimal repairs, less than $1,000. If you want to go duplexes, triplexes, fourplexes, higher yield, meaning you're going to get more percentage back on your property, which is not necessarily the most defining factor in why you'd get a property. Turnkey, professionally renovated. Turnkey homes come with a 1-year warranty. Oh, interesting. 1% rule. So these properties are where the monthly rent is at least 1% of the list price. So if the house was selling for $100,000, you'd be expecting $1,000 in rent. And this is a rule that a lot of investors go by in deciding if a property is a good buy or not. If you want to make sure they're in good schools, I want to look in a little bit more depth just to go over what Roofstock has to offer on their site. I like this one because it's $100,000 and that's kind of easy math. So if you look through it, they often have extensive photographs taken by usually realtors. So I think they do scour the MLS, the multiple listing service, to find rental properties and then identify ones that are good fits for Roofstock. So they may just be pulling these pictures off of the realtor's website. So this guy is list price for $100,000, talking about an initial investment of $37,000, and you can kind of play with this. So the purchase price, they really don't like you to lowball anymore. You can make an offer, but they want it to be at least 95% of what the list price is, and they pretty much say that. You want to lowball more, seek other representation. So say you want to put down payment of 30%, which in this case would be $30,000. You would see that your annual return, and this is the percentage of return after all expenses on your investment. And again, your initial investment is $37,000. So your annualized return would be 13%. However, if you go down and you say, I'm only going to put 20% down, things change. Your annualized return goes up because now you've only put in $27,000, but your cash flow, and I'll go back to the 30%, goes down a little bit because you're having to pay on the $80,000 that you borrowed. So let's go back up to 30%. So the cash flow in the 20% was at $28.80. And at 30%, your cash flow is a little bit higher, $34,000, and you've put in $10,000 more. So it's pretty individual what you want to put in, what your cash flow you want back at, and even what you can get a loan for. This is occupied. Sometimes they say when the lease ends and when it ends and when it starts, not this one, but it is occupied. And Roofstock does do an occupancy guarantee. If you get your house rent ready and then haven't been able to find with one of the property managers a tenant, they will pay up to 75% of the market value for a lease up to a year. So there's some guarantee for investors. You wouldn't find that anywhere else. I like this page, financials, because you can change your down payment. Let's say you're like, I want to go with 40% down payment. And it comes back and it says your initial investment, which is going to be the cost, closing cost, repairs, your down payment, your total return, cash flow. So say you've put in your $47,000. They calculate your return, your rent. It's rented out right now as $1,100 a month. So they just multiplied that by 12. Minus a vacancy, minus property taxes, property management, leasing fees, insurance, and a reserve for repairs. So operating expenses subtracted from your rent, net operating income. So this is what you got after your expenses minus your mortgage payments for the $60,000. Your total net cash flow, $4,000 over the year. So it's $4,000 on a $47,000 investment. So you can also look at your sales proceeds. Say you sold this property in 5 years, property value goes up 2% a year. This is their rate for that particular area. The loan balance after 5 years is this much, closing fees and whatnot. So you get $53,000 out of the sale. It's a estimate, not for sure. You have put in $47,000, so that's about $6,000 more than you put in, plus 5 years of $4,000 cash flow. So that's $20,000. You would, after 5 years, $20,000 plus $6,000, you would realize $26,000 over the course of 5 years on a $47,000 investment. And that's where you get your annual return. So in 5 years, you would get about 11.6% return on your investment. And that doesn't include the tax benefits you get from owning a rental property. Let me see if there's anything else I like in how they help you look at it. So all these numbers are a little bit beyond the scope of this recording, but what I do like it is that you can figure out how much you would want to put down and then what return you would get on the money that you put down. So let's say you put 25% down instead of 40% down. Your initial investment would be $32,000. Your sales proceeds $39,000. Remember, it was $53,000 before. So you are up $7,000, a little over $7,000. Your cash flow over that time, $3,000. So remember, 7,000 and then 3 times 5 years, 15 plus 7, 22,000 on a $32,000 investment. So your annual return, the percent that you get back on your money after 5 years, is about 14.7. It's a little bit like that's just the power of leverage. You have less invested, more return on the less money that you had invested. I'm kind of getting into the weeds on that, but what I really do, again, like about this is just the amount of information that they give. Let's look at a turnkey property. There are no turnkey properties. There's a duplex. This is a triplex. Initial investment, $145,000. There's 3 units, and their rent, let's see if it's occupied, unspecified, month-to-month tenant. Okay. But this is not a bad investment. You put in 25%, you're getting annualized return 21%. Holy moly. Your initial investment is $39,000. You can click over to your financials. Initial investment $39,000. Let's look at sales proceeds. Sales proceeds $62,000 on a $39,000 investment. This is looking very interesting. 62 minus 39 is 23, and then I'll look at cash flow. This is your net cash flow is about 5 times 5, 25. So 23 plus 25 is 48, $48,000, $39,000 investment. So in 5 years, you've more than doubled your money. This is not a bad investment, by the way. I am running out of time for this recording. If you like this, subscribe, like, comment, and I'll see you on the next one. Thanks for joining me. I'm Rebecca.